on the table, people don't realize everything he's actually gotten done, will be really important.
But Congressman, even if not illegal, is tax avoidance immoral? And what does that tell us about the president's character?
Actually, no. Most people that I know would do everything they can to not pay additional taxes. So I think we can have a debate about our progressive tax system, whether there are loopholes that need to be closed, and we can and should have that debate. We have it all the time. But again, I don't call it immoral. I don't want to pay $1 extra in taxes that I don't have to either.
Okay, Congressman, if you go around and actually say you're a great businessman, which is why people should vote for you because you want to run America like a businessman, if the president didn't lose so much money in his businesses, what does that tell us about his state as president?
Well, look, I think a lot of those things were baked into the 2016 election. People wanted somebody who would shake up the system in Washington, D.C. that they didn't feel like was working for them, and that would take a business-minded approach in terms of actually getting results. We have too many politicians, Joe Biden's one of them, who have not done anything else in their lives except be a politician. Have they led and fought in the military? Have they built a business? Have they practiced law? Just something else besides just continually running for office, which Joe Biden has done since his late 20s. So I think that contrast will be laid out in the debate. But I also think in terms of his business success or failure was already baked into what people voted for in 2016.
Congressman, one of the great coldest moments here of all these different threads, these themes that we have, is the Affordable Care Act. You as a small business guy have made real clear, you know, you're no fan of Obamacare, as it's called as well. It's going to be addressed by the Supreme Court here right after the election as well. I want you to speak to the Democrats of your state right now about why the Affordable Care Act is the wrong way to go.
Well, the ACA, the Affordable Care Act, was based on a flawed notion that in order to have a broad enough pool of healthy Americans to bring prices down, you basically had to force people to buy the insurance. That's the individual mandate that is now up in the courts. I think it's unconstitutional to basically fine people if they didn't buy insurance. That notion has failed. The numbers have failed, and that's why people are paying anywhere from $800 to $1,500 a month in premiums and $10,000. Look, if you're paying $10,000 a month in deductibles before your plan actually kicks in, that's not a plan.
Okay, Congressman, I take your point, and I understand, and we all understand the large deductibles is a third rail. What is the president's proposal? What is Michael Waltz's proposal if we don't do the Affordable Care Act?
Well, we have to get real free market reforms into our healthcare system that actually drive down costs. A government takeover of the program, which is what Medicare for All is, only pass those costs on and will actually drive them up. Look at the VA, look at the Department of Veterans Affairs, which is actually government-run healthcare, 1,200 hospitals and clinics under government management, and all the problems that we've had. Now magnify that across the entire country where bureaucrats are running our hospital system and you're taking away private insurance. Bernie Sanders has actually been honest about that, and we'll have to raise taxes to pay for it. That's not a solution. We need to get in things like the portability of care, selling across state lines, and we can go down the list of things that will literally drive down costs.
20 seconds left. When do you jump out of an airplane again?
The next time we have our National Guard drill, and I'll be yelling airborne and thinking of you guys.
Unbelievable. Francine, he is out of his mind. Michael Waltz, well, cut and chiseled at, I believe, 46, the congressman from the 6th District of Florida. That is an extraordinary story, still jumping out of airplanes. Like Ritika Gupta jumps out of airplanes with our First Word News in New York. Here is Ritika Gupta.
Thanks, Tom. A blockbuster new report says President Trump paid just $750 in U.S. income taxes in 2016 and 2017. According to the New York Times, the president reported losing millions of dollars on his golf courses. Plus, he reportedly has hundreds of millions in debt that will come due the next few years. The president called the report fake news. He told reporters he pays a lot, but didn't offer any specifics. Senate Republicans have signaled there will be a quick confirmation process for Supreme Court nominee Amy Coney Barrett. Hearings would begin in about 2 weeks, and President Trump is optimistic that Barrett could be seated on the High Court before Election Day, November 3rd. And 2 new polls show Democrat Joe Biden maintaining his lead over President Trump nationally. Other surveys show Biden ahead in key swing states and running close in others. The Washington Post ABC News poll gives Biden a 10-point lead. The New York Times and Siena College have Biden up 8 points. The 2 candidates square off in their first debate tomorrow. And almost 200,000 people in Northern California had their power cut because of the threat of wildfires. PG&E is trying to keep its power lines from starting new blazes. The utility went bankrupt last year after its equipment ignited catastrophic fires. Wildfires in California have burned thousands of acres in the last month. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Up next, Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. We talk about lockdowns and we talk about COVID-19. That's coming up next, and this is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we continue, of course, to track the virus, and Bloomberg has developed this unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, for this Monday morning, we're delighted to be joined by Dr. Joshua Sharfstein, Johns Hopkins Vice Dean for Public Health Practice at the Bloomberg School of Public Health. Dr. Sharfstein, when you talk about vaccines, and we've been talking about them for quite some time, is the bigger challenge to, make sure that people feel safe in taking it. And I know New York has taken some steps in making sure that these vaccinations, these vaccines, once ready, will be vetted properly. Will it mean that people will want to take them?
That's absolutely correct. I think that vaccine acceptance is extremely important because you can have a great vaccine, but as they say, vaccines don't save lives, it's vaccination that saves lives, and people are going to want to have to take it. So what that's about is the confidence that people have in the process. And unfortunately, I think the White House has undermined that confidence by putting it in such an intense political context. And I think that's why there are a number of steps that both the FDA can take and others are thinking of taking to depoliticize it and just make it about, the science in a way that can inspire doctors to feel confident, and as a result, many people to feel confident about it.
Professor, this came up 4, 5, 6 times this weekend. Let's get an update from you on a Monday as it gets a little bit colder out there. Will there be a shortage of other vaccines / shots, like a so-called flu shot?
Well, in a way, I'm kind of hoping there'll be a shortage because that'll mean that everyone's getting the flu shot. So we want to have as many people as possible to get the flu shot, particularly people who are at high risk for flu, and particularly people who may not have gotten the vaccine before and can sort of get used to getting vaccines through the flu shot, which will protect them during the flu season. So unfortunately, there probably is not enough flu vaccine for the entire population. So people should go out and get the flu shot. And if we run out, we run out. And hopefully we'll run out, on the early side to really try to protect as many people as possible from the flu.
Explain the medicine of a given virus or bacteria overlaid on the likelihood of having great harm from the COVID virus.
In other words, having both together.
Yes.
Is that what you mean?
Well said.
So,
clearer than me.
Yeah.
Thank you, doctor.
Okay, sure, no problem. Well, I mean, there are a couple of problems, that could come up. One is just many more sick patients. There's some years where the flu, fills up the hospitals by itself, and then on top of that, you would have a pandemic. So that's a really scary scenario. I think it's less likely if people wear masks and keep their distance, because the same things that keep people from getting COVID also keep people from getting flu. And in the countries in the southern hemisphere where people are taking a lot of precautions, they've had very mild flu seasons in their winter. So that's what we're hoping. However, if people disregard masking, and are going out and doing their thing, flu could start circulating, and you're going to see even worse problems there, both with COVID and flu. And of course, the process of getting medical care for flu will bring people in contact with people with COVID. And so, I think either places are going to do relatively well on both or relatively poorly on both.
Joshua, what exactly are monoclonal antibodies? I mean, from extensive reading, as far as I can make out, they're the guys that basically protect you, right? They're made in a lab and they protect you against infection. And what do we know about these monoclonal antibodies to fight COVID-19?
Sure. It's a little bit like the plasma. Plasma is just all the antibodies that people have are in plasma. Monoclonal antibodies are trying to take either one or maybe a few of those antibodies that are thought to be the most effective to protect against COVID-19, and then they make a lot of them that they produce them. It's not taken from somebody. And the idea is that they could be given to people who maybe are just exposed to the virus but haven't even gotten sick yet, and they could keep them from getting sick in the first place. It also could be used as an early treatment. And, there's some hints that, out of the studies that they may be effective. So we'll have to see when the studies get reported. But that's another, tool in the toolkit to protect people.
Is a virus now less deadly? And is it because we know how to treat it better? Or, what's the difference between now and last March?
Well, I don't think the virus has changed, as much. It's possible the virus may have mutated a little bit, but more likely it has to do with the fact that they're different. People at lower risk are getting the virus, so as a proportion of people getting sick, fewer people are dying. Unfortunately, what we're seeing is that even though young people might get it initially, they can still pass it on to older people, and a few days after the younger people get it, older people get it. So there's still quite a lot of deaths. I also do think that we're getting better at treating it, and that's a real tribute to all the doctors and nurses and others who are in there figuring out new ways of taking care of patients, and learning what didn't work and trying out different kinds of things. We now have some very good treatments, particularly steroid treatments for people who are really sick, and reducing the mortality by half is a big deal with steroids.
Joshua, thanks so much. Joshua Sharfstein there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Coming up on Bloomberg Surveillance, Congressman French Hill of Arkansas. That's at 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Ladies and gentlemen, I'm placing an order to sell short Japanese yen. The price I'm placing on 105.350. Okay, order placed. Sell short at 105.350. Okay, let's see.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Caesars Entertainment says the board of British gambling company William Hill will probably recommend its $3.7 billion takeover price. That would give Caesars an advantage in a potential bidding war with Apollo Global Management. Caesars and William Hill already have a joint venture in the U.S. Double Line Capital CEO Jeffrey Gundlach is considering leaving his Los Angeles base. Gundlach tweeted that real estate agents in low-tax states should give him a call. The billionaire investor is unhappy that California may raise taxes on residents who make over $5 million a year. And that's the latest Bloomberg Business Flash. Francie.
Thank you so much, Ritika. Now, JP Morgan is moving about $230 billion from the UK to Frankfurt as a result of Britain's exit from the European Union. Now, that's according to our reporting. And in a Bloomberg exclusive, Vis Raghavan, JP Morgan's chief executive for EMEA and co-head of global investment banking, told us that the move is happening with or without a deal.
What we've done is undertake those kind of people moves we need to do to be functional as of Jan 1. And really, I think we just kind of bated breath watching to see, how does kind of Brexit manifest itself and what does it mean for financial services and the like. But in terms of being ready, we are absolutely prepared for every outcome.
But Viz, even if there's a best case scenario, i.e., a trade deal, how much of an exit would we see in general out of the City of London?
Look, it really depends on what equivalence and what equivalence looks like and what you are able to continue to do and not do. Clearly, London, and it's kind of given the liquidity pools that sit here, it's a major global liquidity center. Its relevance as it relates to being a kind of a major money center is still going to be kind of strong, and it's not going to be entirely diminished. But it is inevitable, depending on what equivalence looks like and what we are able to do or otherwise as it relates to EU-facing clients, you will see some action and some activity move to AG. In our case, AG, the German legal entity, is going to be our flagship EU-facing entity. So depending on what we are allowed to do, you will see an element of activity kind of migrate to the continent.
So in terms of the amount of revenue that JP Morgan actually does in the UK, would it be 20 to 25% moving to continental Europe, or would it be less or more?
I think it's difficult to kind of put be a precise number to it. It really is a function of, what activities are you going to be allowed to continue to kind of execute, from, being based in the UK. So if you take, for instance, even in a primary transaction, when you look at the distribution of a primary deal, if you take an IPO or an equity placement, I mean, the typical distribution profile tends to be around, 20-30% US, likewise 20-30% EMEA, and then you end up with a portion which is kind of rest of the world. So if you look at that activity, a lot of that liquidity sits in these kind of money centers in the US, in London, and in Asia. So it is hard to quantify it precisely, but it's going to be entirely dictated by what are you going to be allowed to do in this post-Brexit equivalence agreement.
Okay, but is 25% something that sounds about right, Viz, or are we off the mark?
Yeah, but I think you're in that zip code. I would say it's a reasonable start, and you need to really then monitor exactly the nature of the activity and what you can basically do from based in London, and then what actually migrates to the continent.
How difficult has a pandemic actually made the shift to the continent?
Look, I think it clearly for most folks an element of mobility was kind of when I was left to the final stages, and clearly now with the pandemic and quarantines, etc., it imposes kind of extraneous restrictions on that mobility. And clearly what we are looking at it is to be very open-minded and flexible so that we can, provide accommodation for the employees that are affected, make sure we kind of take care of travel, and really have kind of some kind of forbearance in making sure that our experience for our employees is as smooth as possible. And likewise, I think the key focus here is for clients who really see a seamless JP Morgan, really not in any way impacted by people moves and internal kind of mobility led initiatives.
Well, that was Viz Raghavan, JP Morgan's Chief Executive Officer for EMEA and co-head of Global Investment Banking, speaking to us earlier. Coming up next, more Bloomberg Surveillance.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Worst-case scenario is a double-dip recession. It's not our base case, but it's a worst-case scenario.
Investors who are expressing their views are starting to show more bearish sentiment.
What happens to fiscal policy as we go into 2021 is going to be important.
We know there are millions unemployed, but the unemployment stats are everywhere.
We don't have to torture the data's torturing us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance, live on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro, counting you down to the market open, with Europe flying out of the gate. Equity futures, Tom Keene, up 42 on the S&P 500. Back half of the week, payrolls Friday. Tom Keene, 24 hours away. A debate in Cleveland.
Real persistent strength here this morning, up 30 earlier, now futures up 42, John. As you say, the bond market locked in a John Farrow-like manner, but really nice correlation to a weaker dollar as well. So, you know, there's a real nice lift to it. I got to admit, John, I haven't watched a debate since Kennedy-Nixon. John, that was a few years ago, think 1960. And I'm actually going to watch this debate. This is going to be extraordinary.
Yeah, I think the ratings will be through the roof for this one, Tom. And listening to the political pundits going into it, I hear again and again, time after time, that the bar is low for the former VP, Joe Biden. I think from a market's perspective, Tom, if Joe Biden was a stock, that stock is riding high going into earnings season with plenty of downside still ahead.
Well, it's there, but I really defer to Mr. Cirilli on this and the others, the pollsters that we have. I think of Ann Seltzer out in Iowa as being just so professional. John, yeah, over the weekend, the vice president had a wonderful weekend in polling at the national level. But, John, you've really got to go to the state level on those battleground states, particularly Pennsylvania and Florida.
Looking forward to catching up with Kevin Cirilli in about 10 minutes' time. Lisa Abramowitz, the Fed speak through this week. A chorus of Fed speak last week. More still to come again. I've lost count of how many Fed speakers we've already heard from.
Yeah, and the message is getting a little more consistent, right? There was some inconsistency. Now it's more consistent that more fiscal stimulus is required to get the economy back on track. And I'm interested to hear what the ECB's Christine Lagarde has to say on that front. She's speaking at 9:45 a.m. to the European Parliament in Brussels today. There is this sort of tussle here with the data not necessarily being that clear or reflective of the reality, how much she will push forward with perhaps easier monetary policy and a push for more fiscal. The UK and the EU also kicking off a key week of Brexit negotiations. John goes to the UK. We talk Brexit, and that is what we will be watching, because this really is going to be perhaps a turning point, whether we see the potential for a hard Brexit picking up. And 2 p.m., President Trump giving a briefing on national COVID testing strategy. This is really the key question, John. You know, we don't have a vaccine. We're not going to have a vaccine for a while. Why can't we get tests? You wake up, you spit into a test, you decide whether or not you have the virus, and you go about your day accordingly. Why don't we have that yet?
Well, let's talk about that, and let's not talk about Brexit. I think for sterling traders, Tom Keene, it's like Brexit headline roulette in cable right now. It's ridiculous. And on the other side, I have to say, front page of the Times waking up in London this morning was about more restrictions, potentially exploring a 2-week lockdown, Tom.
John, thank you so much for bringing this up. And, you know, I've been in therapy through Sunday on this stupid penalty shot idiocy with Crystal Palace and Tottenham. But, John, to be honest, Britain's fallen off our radar here with all of our politics. Give us an update on where the nation is with this virus.
There's a huge question mark as to whether the restrictions announced in the last week will be enough. And on the table still according to many reports, as a 2-week lockdown maybe in the next month or so, but a more severe lockdown than the one that was announced last week, if you even want to use that language. Tom, I think we've got to give it time. And I think, as we've seen time and time again over the last several months, if you make a call on this virus, you look like an idiot 5 minutes later. So I'm not going to make a call. But certainly the worry is that more restrictions could be coming for this economy. So sure, sterling positive off the back of some happy talk around Brexit talks, but there's some real nervousness out there in this FX market on that trade, Tom.
Yeah, totally. Here in America, clearly it's about the school systems as well. Lots of uproar in New York City about that, but really coast to coast. John, keep talking. Futures are going to be up 50 if you keep going.
Up 42 on the S&P. We're flying here, not just in the US, but in Europe as well. Straight out of the gate this Monday morning, equities getting a bid on the European side after a dreadful week last week. Here's the price action for you. Cross-asset worldwide, beginning with equities. If you're looking outside of the stock market where there is a bid, look to the FX market. A stronger euro, weaker dollar. That was not the story last week. A stronger dollar through much of last week. Euro dollar 116.62. And the sound of silence in the bond market. Hello, darkness, my old friend. A 10-year that does absolutely nothing. 0.67% on a 10-year. I was just teasing you a little bit. I wanted you to sing.
Yes.
And you went there.
Well, what did you expect, John? Really?
Keep going.
Of course he's going to sing.
I knew he was going to do it. That's why I did it.
Well, there you go.
John, that's Bookends. Okay, that's an album from a few years ago. Bookends.
Can I bring in the guest? Just let me get there. Mark Howard, BNP Paribas Senior Multi-Asset Specialist, 7:05. Usually it breaks down at 7:02. Mark, great to have you with us. Looking down to Washington, D.C., Mark, draw the distinction for us between noise and news.
I can promise you I'm not going to sing. Thanks for having me today.
Good, you can stay.
You know, there's a lot of noise. I like to use the analogy of the wonderful French Open that BNP is proud to sponsor. There's a lot of back and forth in D.C., and the markets have had to respond to it. There's been, a series of headlines, whether it's around the Supreme Court, around the president's taxes, and who knows what else is going to come out of the debate tomorrow. But investors have pulled back. There's no question. And I think that's a really important theme for your viewers to grapple with, is that there was a long bullish run led by NASDAQ, but also in the credit markets and in other parts of fixed income. And now people have pulled back a little bit. September has been a month of consolidation, and I think October will be the same. It's going to be bumpy. And tomorrow night, we're going to get a full dose of that.
Mark Howard, I want to digress here. You were kind enough to send me a wonderful coffee mug from the oyster people up on the Damascata, the Glidden oyster people. They are an absolute textbook small business. How bad is small business like Glidden Oyster getting crushed right now?
Well, it is a genuine concern, as you've heard, and I think you also might have heard Boston Fed President Eric Rosengren speak last week, saying how some of the lending programs to small businesses have not had as big a take-up as some might have thought. So I think there's a lot of stress in the system, and you hear that from voters. You see that in some of the protests on both sides of the aisle. And there's a lot of anxiety, especially with the October 1 roll-off of support. You've heard the airline companies speak very vocally about their need for additional fiscal support from Washington, and the same is true for small business.
Well, a lot of people agree it's going to be a rocky period going forward. Even Mike Wilson, who's been a bull for most of this year of Morgan Stanley, coming out over the weekend and saying he expects the sell-off to continue. Where do you get defensive, and how? Do you just go to cash, or do you depend on, say, the 10-year Treasury to do more than just flatline?
Well, as you guys were laughing earlier, the 10-year has been kind of boring lately, so I don't think there's been a lot of money going into that. I do think people want optimum liquidity. And Lisa, it's a great question, because when you talk to the major fund managers, what's really critical to realize is that their year was made in March and April. They made a lot of money stepping into the breach, exploiting volatility and uncertainty and turbulence. And so in order to do that again, if we have it in October or around the election in November, they need pure liquidity. And so I think you're going to see it in cash, you're going to see it in money markets, and in short-term T-bills and short notes.
Well, Mark, let's talk about where the gap could be that they might fill. High yield spreads just winding a little bit. You know, I don't want to make too much of a big deal of this. I don't think it's significant yet, but it's not insignificant what we saw last week, Mark, considering that the Fed's now a player. Your thoughts on the cracks that emerged in the last week or so?
Yeah, I think they were pretty broad. It wasn't just softening in valuations. There was the first outflow in high yield in some time. We watched the credit derivatives marketplace closely, and we saw an increase in interest for credit protection in the options market, and we also saw a reduction in the longs of the CDXIG. So I think there are a number of signals, and of course the emerging markets had some softness. So I think there are a number of places that you could see further weakening in the event that we have a lot of instability and questions, particularly around constitutional issues, because that's not a playbook that investors have much history with, right? The virus was a big unknown, but at least the Fed could address that. The Fed's not in a position really to address a constitutional issue if, in fact, that comes to pass.
Mark, what's the measurement of your wall of worry right now? I mean, hasn't short interest in all this? I mean, folks, the S&P 500 based off futures up 42 is down a horrific 7%. Oh, the humanity. I mean, Mark, we're down 7% on SPX right now. And am I right? There's just been a massive swing to a short bet?
I think I don't know about that, Tom. I think there's been more just taking some chips off the table. In certain names, I'm sure there have been some idiosyncratic short bets put on. But I think a little bit of steam blowing out of the system is a healthy thing. So my wall of worry is not that high. I think the odds of a major disruption later this year are quite low. And that's why valuations are still so attractive or so full in many asset classes. My point, though, is that late in the year, after investors have done pretty well, particularly since March, it's just human nature to take some chips off the table. So, and I think the lesson learned back then was when you sense some anxiety, you need some liquidity. You need to be prepared to pounce. And so that's what prudent investors are doing. And it's augmented a little bit by quarter end, the end of September.
Hey, Mark, great to catch up. As always, good to see you. Mark Howard there of BNP Paribas on the latest in this market. Equity futures flying this morning. Europe doing nicely as well. And the FX market, as you might expect, turned last week upside down. It's a stronger dollar last week, a weaker dollar this morning against the whole of G10. Risk appetite's the dog, Tom. The dollar's the tail, and that's the story the last couple of weeks.
It's correlated, and, here we are with a lift. But, John, I really want to emphasize all sorts of statistics show a lot of people getting gloomy awful fast. And, like, Ellen Zentner out with a smart note, and she says, look, there's light at the end of the Q2, Q3 tunnel.
Not just on the data, Tom, but more on policy. I think it's been a little bit of doom and gloom around the policy story, not just fiscal, but monetary as well. I get the feeling, and we can talk about this through the week, that the market and the Federal Reserve are almost talking past each other at the moment. The Federal Reserve is keen to communicate just how high the bar is for another rate hike at some point, years and years away. The market's interested in how low the bar is for more policy action. And that's the story from the market side. And I just think both sides at the moment, Tom, just talking past each other in the last week.
And I'm just bringing this up. It's just fallen into my puny brain here, still shocked by the tots. And, John, it's simple. At this debate tomorrow night, do we get these two candidates to talk about an infrastructure bill spring of next year?
We might do. It's not up to me, though, is it? It's up to a certain Mr. Wallace. We'll talk about that next. Coming up in the next hour, Congressman French Hill of Arkansas. Looking forward to that conversation from New York and London. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Trump is denouncing a blockbuster report on his taxes as fake news. According to the New York Times, the president paid just $750 in U.S. income taxes in both 2016 and 2017. The paper says he reported losing millions of dollars from his golf courses and has hundreds of millions in debt that's coming due. The Times analyzed at least 2 decades worth of the president's personal and business tax returns. Democrats are previewing the tactics they'll use to oppose the confirmation of Supreme Court nominee Amy Coney Barrett. They're zeroing in on the risk to Americans' health care coverage. The Supreme Court will hear a case in November that could lead to Obamacare being ended. Regardless, Barrett's confirmation seems assured because Republicans have a majority in the Senate. The UK and the European Union are starting a crucial week of Brexit talks. EU officials are stiffening their demands over how any trade deal will be enforced. They've lost trust in British Prime Minister Boris Johnson because of his attempt to rewrite last year's exit agreement. Still, both sides are holding out hope that a deal can be reached. And a big victory for Uber in the UK. A London judge ruled that the ride-hailing service is, quote, fit and proper to operate in the city. Last year, regulators revoked Uber's license to operate in London over safety concerns, but the company's cars were allowed to continue to pick up riders during a court review. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Totally fake news. No, actually, I paid tax, and you'll see that as soon as my tax returns. It's under audit. They've been under audit for a long time. The IRS does not treat me well.
The President of the United States responding to the latest report from the New York Times, 24 hours out from a debate in Cleveland between President Donald Trump and the former VP Joe Biden. Your price action going into the opening bell this Monday morning, shaping up as follows. 2 hours and 12 minutes out with equity futures bouncing nicely, up 42 on the S&P 500. Nice rally across Europe as well. It's last week upside down in the FX market. Euro dollar 116.58. Top of the pile, sterling, some Brexit happy talk. fueling the cable move this morning. Outside of all of that in the bond market, to be fair to Treasuries, we did have a move last week of about 4 basis points, but it's still so range-bound over the last couple of months. 0.67% is your yield on a 10-year, and crude, Tom Keene, just about holding on to 40, a 40 handle at $40.30.
Not a 39 handle. That gets your attention as well, but clearly the lift here of 41 points is important as well. I wrote a quick note to the team this morning, folks, about Leonard Hand in 1934, and I really, particularly for our global audience, want to codify that tax avoidance is a great American tradition. I thought the New York Times language, the careful wording that they used throughout their extensive reporting was really quite careful and respectful of the American tradition. Kevin Cirilli translates for us this bombshell reporting by the New York Times. Kevin, the polls have widened nationally. You've been wonderful about the polls at the state level are much closer. Does this news of the New York Times change the battleground state math?
You know, I put this question to Republicans and Democrats last night, and candidly, I think what both sides are telling me is that it's going to provide the Biden campaign and the Trump campaign an opportunity to talk about their differing policies on taxes. And both sides have said that they want to have tax reform legislation in the next year. However, they want to do it very differently.
You know, Kevin, I want to give you one line. This is grossly unfair, folks, to take one line out of the New York Times, and that is the idea that the president was reporting the revenue from his various entities versus the profit or income down the income statement, which clearly was listed as a loss. I mean, these little nuances along the way, do they matter?
No. And look, I mean,
Why
I
not?
go back to, because I go back to the 2016 campaign, and I go back to what when he was an anomaly and not releasing his tax returns, and when he said openly on the campaign trail that he's taken advantage of the tax system, and that he wants middle class and lower middle class Americans to have the same take advantages that the wealthy and the elites are able to take advantage of. In contrast to that, I think that in Cleveland, this is definitely going to be something that Biden hammers home on. This is definitely going to be something that they are going to pick apart. But I think in the bevy of news, I'm not sure that this is as monumental of a shoe to drop. But Biden heads into this winning. Biden heads into this debate with the advantage, and so he's got to maintain that lead, obviously.
Kevin, just looking through the subjects for tomorrow in the debate: records, the Supreme Court, COVID-19, the economy, race and violence, the election after we've actually had the election, the peaceful transfer of power. Kevin, how does the former VP Joe Biden make that report in the New York Times count tomorrow? How does he turn it? What's the argument right now?
Pandemic. I think you're going to, based upon the conversations that I'm having, I think Biden is going to hammer home on.
Okay, ladies and gentlemen, as you can see, I opened new position for Japanese yen. We sold short at 105.350.
It is still, the economy remains his top issue, and so it provides him an area to pivot to his strength, which is on the economy. And so that's why I think, you know, respectfully to the New York Times, I think that this provides the president an opportunity to talk about the economy, which is something where Americans are more trusting of him on.
And Kevin, usually during this campaign season, the oxygen gets sucked out of Washington, very little gets done, and everyone just sort of waits to see the results in November. We are in a different moment, and you could hear that from Nancy Pelosi, House Speaker, yesterday when she said that she is working with Treasury Secretary Steve Mnuchin on an additional bill and negotiating, and she has confidence that perhaps they can get to some sort of agreement. How realistic is that, given the fact that the here and now is turning down and is important, and that they need to respond to it?
It's dizzying. I mean, just the amount of news flow out of the financial services world and the regulatory world over the past 2 weeks has been dizzying, to say the least. And you're absolutely correct. Typically, this is a time where Washington takes a pause and holds its breath. But now folks are holding their breath to see whether or not this stimulus ultimately gets done. You know, Congressman French Hill, Republican from Arkansas, will know that better than anybody. But the path appears to be narrowing in terms of getting that done ahead of the November 3rd election. However, similarly, similarly to the Supreme Court, the nomination process with Judge Amy Coney Barrett likely going to happen before early November. The fiscal stimulus, fiscal relief talks likely will happen, I would argue, before December 11th. The next continuing resolution is set to expire.
Kevin, on the Supreme Court nomination, this is in the zeitgeist, folks. Again, globally, there are 2 senators from California. Should the senior senator of California yield to the junior senator of California on the Committee on the Judiciary?
Look, Senator Feinstein is someone who is going to be finding herself in the middle of the far left of the party, who are saying not even to acknowledge this nomination, as well as other centrists who are in her party, who are saying that in suburban America, a law professor from Notre Dame, and someone who is the mother of 7 children in a diverse family, deserves to be heard in the confirmation process. From the sources that I talk with on the president's reelection campaign, they thought Saturday's unveil was a political home run, and now it comes at a time in which, quite honestly, the fate of the Affordable Care Act could be quite literally hanging on her shoulders.
Kevin, we've got 60 seconds. This is a serious question. It might sound like I'm joking, though. Have you ever met an undecided voter in the last 4 years?
Yeah, I mean, I know a lot of them. I'm not even joking. I'm not even trying to be funny. I mean, I know some of them quite well, because there is a streak in American politics where people were deciding, and it might not make sense but between Bernie Sanders and Donald Trump, and that is very real. That is very tangible, and if you get outside of our collective cities, you will meet them and you will find them.
Kevin, is Carson
Wentz?
Wentz
There's an accusation in there somewhere.
Is Carson Wentz of the Eagles undecided?
You know what? Let me tell you something, Tom Keene. There will not be a draw tomorrow in tomorrow night's debates. And that's all I'm going to say. That was a pathetic showing on behalf. I don't even have a green tie on today.
Wow.
That's how disappointed I am.
Kevin Cirilli, punchy on the Eagles, I think.
Yeah,
Bloomberg
that's
chief
American football, John.
Hey, Tom, I've got to be serious. Just a serious note. I've done my best to travel the country in the last 4 or 5 years, and I've got to say that the country's so divided, I have yet to meet someone that is undecided.
Well, it's a valid point, but it's shocking how narrow it is. Marty Schenker of Bloomberg News says 5%.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
From New York and London for our audience worldwide, this is Bloomberg Surveillance live on Bloomberg TV and radio. 2 hours away from the opening bell, equity futures shaping up as follows. After 4 straight weeks of losses on the S&P 500, here's your bounce, up 41. On the S&P, we advanced 1.2%. In the FX market, weaker dollar. Compare that to the strong dollar we had last week, euro dollar 116.59. And in the bond market, bit of movement, yields up, curve steeper, 0.67% is your yield on a 10-year. Front half of the week, Tom Keene, about the politics. The back half, about the economic data.
Jobs. I spoke to Michael McKee moments ago, John, about this, about claims on Thursday and then on to Jobs Day. He says claims continuing a mystery. Jobs Day, maybe we'll have some substance to it. Right now, we're going to dive into one of the great thoughts is what to do with traditional investment. In private wealth management, it used to be a comfortable formula, 60-40, call every 90 days and tell them how much you love them. That is dead. Kristen Bitterly knows this, with Citigroup Private Bank, head of all of their capital markets as well, out of Notre Dame and Northwestern. We're thrilled she could join us this morning. Kristen, I want to go to Sharpe ratio, which is without beta. Sharpe ratio, which is based on a risk-free rate. You don't know the risk-free rate. I don't know the risk-free rate. How do we get a Sharpe ratio for wealth management into 2021? How do we use the traditional tools?
It's a completely different playbook right now, given what we're going through, both in terms of the discount rate, in terms of the risk-free rate, as well as just looking at the fact that this is an exogenous shock. We talk a lot about this, that once the pandemic abates, recovery, we will return to Q4 of 2019 earnings. So the major thing in terms of looking at the risk within your portfolio right now is you have to say, okay, where am I going to get returns from? And it's not from cash holdings, and it's not from investment grade in terms of the fixed income market. And so what we're looking at right now is just focusing on diversification in terms of your broad-based equity portfolio on an international basis as well as on a domestic basis. So this is really about traditional risk allocation and balance, and making sure that this performance that we've seen over the past couple of months, you don't have outsized risk in a particular area or sector.
What is the mood of your accounts? I mean, it has been an absolutely original 2020. I know everybody at Citigroup owns Amazon and Apple up to eyeballs as well, but what's been the response of your accounts to bonds as a portfolio anchor?
You know what's interesting? I have to tell you that not just bonds, but looking at cash holdings, there's really, from an investor standpoint, you have 2 distinct camps. You have those that when you saw that pullback in March, they dove in. kind of full speed into the market, have a lot of risk assets, have been participating in this recovery. On the flip side, what you still see is substantial amounts of cash on the sidelines. And we're talking about portfolios that have up to 30% in cash. And so one of the things that's interesting to your point is that looking to bonds as that counter, you have some people who are significantly overweight cash and cash equivalents. And the conversation there is, how do you have the right amount of cash? You settle on that, but don't make it 10 times that amount. And we do see that tendency and that risk aversion in portfolios.
What does it mean? I mean, I know that Tom Keene has an entire mattress that's stuffed with triple leverage cash, but when people go to cash, is it putting money in a deposit account? Is it going into money markets? How is it being represented at a time when treasuries are no longer synonymous with cash holdings?
It's exactly that. So it's money market accounts. We look at just pure cash holdings, banking deposits in terms of what we're looking there. And then the question is, how do you get those investors to comfortably put capital to work in this environment where everything feels relatively expensive?
So what do you tell them? How do they put it to work?
So some of my favorite strategies. So we'll go through a couple of them. But one is actually when we look at this volatility environment, and especially going into elections, you look at the implied volatility curve, and it's so interesting, right? Because it's telling us that everyone is worried about there being uncertainty around elections, that there being a spike in volatility, not even about the outcome of elections, but actually more importantly, whether they're delayed or whether there's a contested election. So that spike that you see in November and December in implied volatility creates a really interesting opportunity within the options market. And one of the strategies that we're using, this is not for leverage. So I know options, sometimes you kind of get that reputation for leverage. This is about saying, if you're nervous about putting capital to work right now, you can sell an option that gives you premium today, a lot of this being double-digit yields on an annualized basis. And what do? You basically buy into the market if it dips 10% below today's levels. So
we've got a bit of a connection problem with Kristen. I'm going to step in just quickly. Kristen Biddley of Citigroup Private Bank there. Kristen, hopefully we can re-establish that connection and get back to you in just a moment. The trade that Kristen is talking about, though, Tom, I've heard it before as well. I heard it just last week. The volatility is high and that many people want to sell that volatility. Jared Woodard of Bank of America was talking about this just last week on my show as we were counting down to the opening bell. Tom, I don't know what your thoughts are, and I'm not sure you're going to share them right now either, but there is a clear argument that volatility is elevated going into the election and coming out of the election as well. And some people are looking to fade that. Kristen, clearly, of Citigroup, one of those.
Yeah, they want to fade it. Dean Kernitz on the same page here coming in. The question is, John, where do you come into? I don't hear anybody talking about vol or any measurement of VIX, either the present VIX, the cash VIX, or the future VIX, coming into where it was before this pandemic. Nobody's talking about getting back to Valentine's Day, and maybe that's the ginormous surprise for the optimists.
Trying to game electoral politics, I think, is almost impossible. 4 years ago, Tom, if you really think about the lesson, it wasn't that just people got the outcome wrong, it's that they got the outcome of the outcome wrong. I've repeated that so many times over the last 4 years. It wasn't just that so many people thought we would have a President Hillary Clinton. They thought that President Donald Trump would be bad for equities. And we all remember that night and that morning in the acceptance speech, and all it took were just the soothing words of infrastructure. And I think it's really difficult right now to discount the potential of a Biden government, not the potential of whether he wins or not, but ultimately what it means for markets, Tom. I think still at this point, that is difficult to do.
Well, it is. I mean, there's an assumption there. You know, the Democrat higher taxes, the usual cliches, but I'm hearing other things besides that from global Wall Street as they interpret it. I'm with you, John. After 2016, everybody here has a huge, huge humility. I know I do.
And that's why, Lisa, I guess, we've got volatility very, very elevated because no one knows what to do with either outcome. The one outcome that we know that everyone is worried about, it's the single one that's on pretty much everyone's radar right now, is whether we wake up November 4th without a result. And perhaps that's the risk going into the debate tomorrow, that if the president has a great performance, it puts that tight race back on a table, that contested result back on a table, which would be very much risk off.
The thing is, John, you were talking about how every year it's very hard, every election year it's very hard hard to game out what an administration would mean for equities. But it's not just the election, right? I mean, you have the virus that's picking up in different places. You have the idea of a contested election, and I think you make a really good point, which is President Trump, if he performs well, it could create even more volatility. And then there's the economic data, which we obviously can't read. We don't have a sense of whether it's an accurate representation, forward-looking or backward-looking. I mean, it's just this level of confusion. How do you get the conviction to sort of double down and take that cash and put it into equities that are, by all historical measures, high-priced?
Well, I think, Lisa, it would be fair to say that most people would have more confidence if they had confidence in policy right now. And the one thing that's really blurred some real clouds over in the last couple of weeks is the outlook for policy. And I mentioned this earlier in the hour. The Federal Reserve is communicating basically one thing right now, that if things get better, we won't hike interest rates. What the market wants to know is what happens if things get worse. What are you going to do about it? And last week when you started to see high-yield spreads start to widen out a little bit, Lisa, I know you were watching the same thing. I think the question is, when does the Fed start to step back in? It's clearly not 50 basis points wider. Is it 100? Is it 150? Is it 200? They're the kind of things that market participants are thinking about. I think we can all agree rates don't rise for a long, long time. It's what do you do if things get worse, not if things get better.
And actually, to your point, John, yes, this week when we got, or last week rather, Thursday, when we got the balance sheet from the Federal Reserve, people were looking at those corporate debt purchases, noting that they had not gone up that much, even as you saw a little bit of risk off really start to pervade the markets, John.
Pleased to say for a final comment, Kristen Bitterly of Citigroup Private Bank is back with us. Kristen, my apologies for the technical connection on our side. Hopefully we've re-established that now. We would love your thoughts on the market and the Fed talking past each other, Kristen, because at the moment, the Federal Reserve is communicating what they would not do if things got better. What everyone wants to know is what they would do if things got worse. Have you got a take on that?
Yeah, so I think honestly, the Fed is being very clear in terms of their signaling that there needs to be additional fiscal stimulus at this point in time, and that the tools that they actually have in terms of what's available to them, it's very limited. So I think the market and the Fed and what seems like this cross, I think can be rationalized very easily by looking out short term versus medium to long term. Short term, we know these deadlines that are ahead of us. We know we have the election. We know that COVID, there's potential of a resurgence in cases. The risk is very evident and the volatility is very evident short term. Longer term, and by longer term, I'm actually just talking about 2021 at this point in time, we actually believe that we will see an economic recovery, that there are a number of solutions and treatments when it comes to the pandemic, that it will abate, not in a magical moment, but it will abate. And then that is when we're actually going to see the recovery that everyone's anticipating. So I think reconciling the market and the Fed is basically a combination of what is short term and what is looking out to 2021 and 2022.
Hey, Kristen, great to catch up. Appreciate your patience this morning. Thank you. Kristen Bitterly there, Citigroup Private Bank. We mentioned the Fed speak in the week ahead. Here it is off the Bloomberg terminal. Loretta Mester a little bit later of the Cleveland Fed. Then tomorrow, you will hear from Williams, Harker, Clarida, Williams again.
Who else?
Qualls again, Qualls twice. And then after that, Kashkari as well. And then into the start of October, Williams, Harker, and Evans into next week. I mean, seriously, Tom.
Michael McKee's interviewing all of them. He's interviewing Williams like 3 times in a row or something.
Hopefully on this program.
It's amazing.
What's left to say, Tom?
I don't know. You know, we're all going to listen. I think somehow the lead theme possibly would be the cry for fiscal support. You know, I think
the notable absence there is Bullard I don't see on the list. And maybe they're all out in force just to sort of drown out the noise that St. Louis Fed President Jim Bullard made last week. Coming up on this program, Lalitop Cholu, JOHCM Senior Fund Manager. Looking forward to that from New York and London. I can feel Tom wants to say something. Just say it, Tom. Just get it out there. What do you want to say?
I don't know. I got to leave early. I got therapy, penalty shot therapy.
It's Monday.
What a stupid
Therapy
sport, John.
Go, guys.
John, what a
We can
stupid.
talk about it. Okay.
Change the rules. It's dumb.
We'll talk about it in a minute. I don't know why I asked. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A blockbuster new report says President Trump paid just $750 in U.S. income taxes in 2016 and 2017. According to the New York Times, the president reported losing millions of dollars on his golf courses. Plus, he reportedly has hundreds of millions in debt that will come due the next few years. The president called the report fake news. He told reporters he pays a lot, but didn't offer any specifics. Senate Republicans have signaled there will be a quick confirmation process for Supreme Court nominee Amy Coney Barrett. Hearings will begin in about 2 weeks, and President Trump is optimistic that Barrett could be seated on the High Court before Election Day, November the 3rd. And two new polls show Democrat Joe Biden maintaining his lead over President Trump nationally. Other surveys show Biden ahead in key swing states and running close in others. The Washington Post ABC News poll gives Biden a 10-point lead. The New York Times and Siena College have Biden up 8 points. The two candidates square off in their first debate tomorrow. Almost 200,000 people in Northern California had their power cut because of the threat of wildfires. PG&E is trying to keep its power lines from starting new blazes. The utility went bankrupt last year after its equipment ignited catastrophic fires. Wildfires in California have burned thousands of acres in the last month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Are people afraid of calling you because their own credit ratings might go down if it's known that they have to borrow money from the IMF?
If you're a president of a country in trouble, you better call.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
You are getting a bounce this Monday morning from London and New York. Good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. You are listening to Bloomberg Surveillance live on Bloomberg TV and radio. Here's the price action. Cross-asset worldwide. Started with that bounce in equities. Futures up 42, advancing almost 1.3%. The move in Europe, though, Tom, the DAX, the equity benchmark in Frankfurt, Germany, up by 2.84% after getting shredded last week. We come back a bit. Over on the continent, you see it reflected in the euro too, approaching 117 on euro dollar, Tom.
Is that HSBC and Commerce Bank, that management change, the guy at Deutsche Bank going over to Commerce Bank? That helps, right?
I guess to some degree, the HSBC move really helps on a FTSE this morning, with a FTSE 100 up by 1.5%. But clearly the concern was there for all to see last week, Tom, on a policy outlook, on the COVID restrictions. We said it this time last week, Monday morning, happy talk in Europe's over. I don't think this bounce this morning brings the happy talk back. The happy talk is still behind us.
Now, sterling, as we put up on the screen, we welcome all of you on Bloomberg Radio and Bloomberg Television. 129.04 is a nice rebound on sterling as well. This conversation can go somewhere in the vicinity of 12 ways. Michael McKee is our economics and policy correspondent. He comes to us on a Monday amid what I would suggest is record confusion, record uncertainty, and record mystery. Michael, I'm sure that John and Lisa are going to go 8 different ways here, but I'm going to go 14.7, 13.3, 11.1, and the miracle to survey this Friday of an unemployment rate going 10.2% down to 8.2%. That's pretty good, isn't it?
It is pretty good. It's a lot better than people expected, certainly better than the Fed expected. Now they've changed their forecast for where we're going to be at the end of the year, but it's still above where we were in February, and in the middle of the range of where we were after the great financial crisis. Still 11 million people out of jobs, so there's an impact on the economy.
How do the different Fed speakers talk about this week? I know they're going to talk about stimulus and all that, and they're going to talk theory mumbo-jumbo as well, but just the vector here is superb. I mean, superb is the only word, isn't it?
Yes, but now we're going to start to see the economy slow down, and forecasts are we're going to start to see the unemployment rate stabilize maybe a little bit. The forecast for Friday is that it goes down by 1/10, but at this point, we're also concerned about what happens in the month of October, because coming up on Wednesday, the end of the month, is when the airlines are going to start letting go tens of thousands of people. They had to keep them on their payrolls to get their loans from the government. That requirement expires on Wednesday, so we could see big job losses in the month of October, and the Fed is aware of that, and they're very concerned about where the economy goes from here.
Well, let's talk about that concern and how they follow through. Mike, they've been very clear over the last several weeks about what they wouldn't do if things get better. Have you got a decent idea of what they can do if things get worse?
There isn't much they can do, John, and they admit that. They can push down on interest rates. That's basically where they are. That's the tool that they have. Obviously, they can jawbone, but the public isn't going to probably make any changes in their spending patterns because of that. At this point, their hope is on the fiscal side. You mentioned in your last segment about credit spreads starting to rise. Well, the Fed can buy a few more corporate bonds, maybe push down on the investment grade spread a little bit, but at this point, it's really out of their hands. Rates are where they are, and that's where they're going to stay.
And meanwhile, Michael, they keep talking about trying to get inflation up, and I keep asking the same question, but are they measuring inflation right at a time when if you go buy beef, if you go buy eggs, if you go buy a bike, all of those prices have gone up dramatically, even as some of the other prices of things that nobody's using because they can't aren't.
That's always one of the questions about inflation, Lisa, especially the idea of substitution. Do you buy something else because you can't afford what you wanted to buy? The Fed is going to look through that and kind of look at inflation trends in general. We're probably going to see some inflation out there because of energy prices or home prices at some point or another. The question is, do we get a sustained move across a lot of categories of products? And until we get the unemployment rate down significantly, that's probably not going to happen. They're talking about getting inflation up to 2%, but they also recognize that's going to take 2, 3, 4 years. When you look at their last economic forecasts for 2023, they only saw 2% at that point, not above it.
Michael, within all your reading, and folks, he is our greatest reader, Do you just assume stimulus after the election? I mean, is the Fed going to go through the ballet here, assuming maybe like the rest of us that whoever wins, we're going to get some big package?
I'm not sure. I think that if Joe Biden wins, you will get a stimulus package in January or in February, given that he doesn't take office until the 20th. But if the president wins, there's much more reluctance on the Republican side to spend a significant amount of money. And remember, we're going to have the Supreme Court fight taking up a lot of the oxygen. So do they get something done by the end of the year? It isn't clear that it's necessarily going to happen. And if we do see the unemployment rate fall, if we do see the economy pick up a little more momentum, then that might take away some of the imperative in Washington.
Mike, we had John Farrow listing all of the Fed speakers, and it basically is a bombardment of Fed speak, and it feels a little bit like the more they talk, the less they actually communicate, and the more they just sort of edify this feeling that they can no longer act as the pressure valve for markets without some sort of increase in economic activity. Is that accurate, given the fact that it's unclear what more they can do to stimulate the economy and, frankly, even the markets?
Yeah, they'd like the focus to be on Washington and the fiscal side at this point. And they will probably make that point as they go along this week with, as you mentioned, a lot of Fed speak, because the Fed is essentially, in the stimulus standpoint, somewhat out of weapons. They can try to push down on real rates, but at this point, nobody's investing, so it doesn't really matter. There's your pushing on a string. So they need to get money into the hands of consumers, and they're not, nobody's talking about helicopter money at this point.
I'm sure Chairman Powell and Vice Chair Clarida are thrilled with Jim Bullard of the St. Louis Fed after his performance last week.
That's sarcasm.
Mike, I'll let you dodge that one. Michael McKee, Bloomberg Economics and Policy Correspondent. Isn't that always the problem, though, Tom? They all come out and speak, and it's the one that speaks a little bit more differently that generates the most headlines. Pretty much everyone said the same thing, apart from one on fiscal policy.
We could go on and on this, John, but you wonder, are they over-speaking? Is there over-communication? There was a time where...
I don't think we need to wonder.
Yeah.
I think we know.
I mean, I frankly find it of zero value.
Well, Tom, I have to say...
Every once in a while, McKee will ask a good question. It's like, oh, that's interesting.
But given Chairman Powell's performances over the last couple of years, there's been some people who have felt the need potentially to come out and clean up the message a little bit. So there is an argument the other way, that if you just left it to Chairman Powell, it wouldn't be sufficient. I don't think we can put Chairman Powell in the same bucket as the former ECB President Mario Draghi. You know, it's a different kind of story at the moment over at the Fed.
Yeah, that's fair. But again, how many people are speaking in the next 48 hours?
Yeah.
Like
well,
7?
over speaking is not the same thing as over communicating.
Yeah.
Because it's not clear that they're able to communicate anything that the market doesn't already know, John.
Better said.
It's a point well made. Let me tell you something.
Let me tell you something about communication.
Lollipop Charlie, JOHC. I mean, you tell us in every commercial break. Don't worry. Lollipop Charlie of JOHCM, Senior Fund Manager, coming up very shortly from London and New York. Let me tell you something.
Let me tell you something. It wasn't
a Lord.
Spurs letting it go at the end there.
Just
get
rid of the whole thing for everybody. Get rid of the dumb cameras or whatever, however they test it.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Worst case scenario is a double-dip recession. It's not our base case, but it's a worst case scenario.
Investors who are expressing their views are starting to show more bearish sentiment.
What happens to fiscal policy as we go into 2021 is going to be important.
We know there are millions unemployed, but the unemployment stats are everywhere.
We don't have to torture the data's torturing us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. A simulcast on Bloomberg Radio and Bloomberg Television. Bloomberg Surveillance and the news flow just continues. We slid into Saturday. It was quiet. It was calm. John took me off the ledge there over the tots. Arsenal tonight for Lisa. It's too much. It was great. And then Sunday evening, a bombshell, John Farrow from the New York Times.
I never thought we'd start an hour with English football, but we seem to do this quite often now. A bombshell from the New York Times, Tom. How many times have we used that word over the last 4 years?
This time it's real.
And I don't want it to be the story, Tom, but let's talk about whether it is real or not. I understand that it's an important story. I understand it's sensitive for many people in America, but far too often there has been a highlight reel of news anchors sitting there, Tom, saying the word bombshell, and it's done nothing to the polling of the President of the United States. Are you convinced this will?
Oh, no, not at all. And Kevin Cirilli making very clear he felt it wouldn't have much effect on the very, very few, if any, undecided as well. But certainly the granularity of the report and the not threat, the comment from the New York Times that there would be comments to come was important. Timothy O'Brien scheduled to be with Bloomberg Surveillance on radio here in the 9 o'clock hour. John, in the markets, up. If we get talking, we're going to be up 50 points on SPX. Right now, up 44 points.
Really strong bid to kick things off on Monday. I'll whip through some of the price action for you very quickly, starting with the U.S. equity market. Futures with a nice lift, a huge rally over in Frankfurt, Germany. One of the biggest weekly losses we've seen for several months over in Germany. The DAX bouncing back. big time. Over in Frankfurt, the DAX is up by 2.86%. That risk appetite improves. You know the story. The dog is risk appetite. The tail is the US dollar. That means the dollar is weaker this morning against everything at G10. Euro dollar 116.74. Commodities just with a subtle lift. Not a big one here. $40.35 on WTI crude. This morning is last week in reverse, but I think the story, the broader story, are the concerns of last week. And just because we're up this morning, Tom, doesn't mean those concerns have gone anywhere. They're still front and center.
Down about 7% on the Standard & Poor's 500, above that 10% correction level. Lisa, on the economics and linking it into the fixed income market, forgetting about stimulus, which I think we could all agree has been pushed aside. That jobs report this Friday, maybe we'll get some information out of it, but I would suggest claims on Thursday is still a great mystery.
Yeah, and I think that really even claims data is becoming fuzzier and fuzzier and harder to read. I mean, Mike McKee has been really good on how much noise there is around some of these jobless reports. I will say, Tom, one of my main questions as we head toward November 3rd is, given the uncertainty, what's a defensive asset? Right? I mean, we're not seeing necessarily the bid into treasuries the way that we had in the past as people get risk off. If people go to cash, what makes them move out of that? Defensive assets, traditionally defensive assets, are underperforming the most in almost a decade.
John, she's just going right after me on that, isn't she? I mean, she's just getting pumped
Your
up.
fund's
She's just
been getting inflows. I've heard that you've been getting tons of inflows, Tom, away from treasuries.
She knows I'm looking for an entry point. Well, let's do this. Let's start the conversation. I want John to bring in Lala here because they know each other. From John's Property, the real yield. Look for that, folks. Fridays on Bloomberg Television. And John, what's so important here is amateurs look at the single point yield, and pros like Lala look at the spread market and the difference in yields out across time and across credit quality as well.
Lale wasn't available on Friday, and she couldn't make the 9 Eastern show, so this was third choice for Lale. So I'm happy to have Lale with us this morning, and I can share her with you.
And I was third choice, too.
Thanks a lot, John.
JOHCM Senior Fund Manager joined right now. Lale, great to catch up. You've got that dashboard. You're looking at high-yield spreads. We've had a move of about 40 basis points over the last week or so. When does it start to say buy again to you?
Well, I was just going to pitch for Tom's triple-levered cash funds over here.
Is that what you're doing? Cash?
No. I mean, we're keeping our cash reserves, right? The reality is cash is king, right? Don't let anybody tell you anything else, because as you and I, we've spoken about this, there's no such thing as cash on the sidelines, and liquidity in the markets are poor. So for people to be opportunistic, to take advantage of dislocations, you have to have cash. Whether that's cash or you're sitting in treasuries, you need to have something that's immediately sellable. And unfortunately, credit is not one of those asset classes. So the way we are looking at it is really, in our view, high yield still screens expensive, but the key theme in high yield is play the refinancing. So these double Bs and single Bs that are in defensive, that have yield to call paper that, believe it or not, only maybe yields more than 5.5%. 5.5% coupon is now quote unquote high coupon. They are in the market to refinance. And I think for us, that's the last hurrah in high yield to capture a little bit more income than investment grade before perhaps we turn even more bearish on high yield. It's subject to economic recovery.
So, Lala, you would turn even more bearish. What kind of spread are you looking for on high yield potentially at the moment? At the moment, we're about 540. What kind of levels are you waiting for?
Well, 540, it's misleading, right? It has, it has double Bs that trade in 200 and 300 range that everybody else is hiding out. And then you have the industries that are at the epicenter of recovery, leisure, entertainment, and transportation, that trades, multiples of that, right? So half of the high yield index is subject to the recovery. So you have to be really careful how you pick your spots in this. I mean, the example I'll give you, you just said the high yield markets are wider by 40 and 50 basis points over the last week. The recovery themes last week widened 3x that, right? So when you are entering at this point in time, knowing what you know, you have to be really careful, because the upside downside is just not justified. So fair value high yield, believe it or not, I think it's still in the 700s.
Lale, this raises a really good point, which John touched on earlier, which is the market is wondering what more the Fed could do to backstop credit, given how much they've done already. And have we reached this point, Lale, where any Fed put is baked in, and any additional purchases they do will be peripheral and won't make a material difference on spread narrowing?
I mean, the market will respond to incremental news, as you guys highlight. So I think the Fed put is baked in. I mean, you know that their purchases have slowed down, but that's in line with their statement. And I think there will be there to backstop the market. But remember, they're actually predominantly backstopping investment grade. They are backstopping high yield very little through the high yield ETFs and the fallen angels. That's a very different dynamic. And again, it opened the refinancing gates for the higher quality. There's very little near-term maturity that's left for the high-yield companies. If anything, actually, look at the headlines in the last 2 weeks. The quality companies are going for M&A, LBO, and strategic financing. So credit, nobody works for the bondholders, right? Everybody works for the equity holders. And I think that's the risk you take now on the higher quality. The focus is going to shift.
What's so important here, folks, is that Bloomberg's got lots of fancy stuff that Lale's really good at. One of them is HZ1, the Horizon Analysis Chart. Lale, I just put in the thing Farrow bought a couple years ago, which is a 98-year Austrian piece, and he's made 121%. That's why Farrow's looking in Notting Hill. I mean, he's killed it with that Austrian bond, 100 to, I think, 211. Then rates will go the other way. Explain to our audience what happens if we actually get yield up, price down. What does that do to the horizon analysis?
I mean, that's the problem with the broader investment grade markets, right? I mean, the lower coupons meant every company was issuing longer and longer. And as a result, I mean, I think this is also one of Lisa's favorite charts. If you look at the average duration in the indices, in the global ag indices, it's over 8.5 years. And look at the spreads, which are not tight, divide them by the 2, it gives you your break-even point. And if you looked at it historically, it's around 12 basis points on the break-even point. That is your resistance point. And some of these investment grade companies, you're not getting paid for the credit risk. So increasingly, you're taking not only credit risk, but you're also taking a rate risk. And that could be very dangerous. Now, rates may never rise. That's entirely possible. But people have to walk into this trade eyes wide open.
Lale, just a final question from me. When you say 700 basis points fair value, is that what you just think fair value is, or where you think spreads are going?
Always the tricky questions. I think that's where the spread should be going. If the economic recovery doesn't happen, vaccine doesn't turn out to be anything in as an immediate catalyst, some of these industries in that 50% cohort that I've talked about in the high yield industry, they are structurally and secularly challenged. They're either going to go out of business, or they're going to run at 50 to 70% capacity, which means you have to start baking in capital impairment to the bonds, which are not being baked in at this point in time.
Lale, great to catch up, as always. Always enjoy catching up. Lale Topcholi there of JOHCM. 163 basis points away on that call. And Tom Keene, I've got to say, if we were there at 700, the Fed speak we're about to hear this week would be very different, I think, to the Fed speak we'll get.
Well, again, the nominal yield, 4 digits. We do 4 digits, folks, on Monday, 0.6692. We forget, talking to a bond pro like Lale, John, this is just a totally wacko market. I mean, these nominal yields aren't normal. There's no other way to put it. I mentioned the Austrian piece you own, John, just because it goes out to, I think it's 2,118 or maybe 17.
Something like that. There's a lesson here, isn't there? Never tell Tom where you may or may not be living. He will disclose that live
John,
on air.
Come on,
to
John.
everybody.
Repeatedly.
I mean, you popped so much on that Austrian piece, you made up for the debacle known as Lyft. You remember when you got the 8,000 shares of Lyft?
I wish. I wish.
Yeah.
I wish.
Look at those
I wouldn't
markets.
be here.
100 to
Look at
211.
those
You
markets.
can't seriously.
That is my out.
But Lisa, this is serious. You can't make money in bonds. 100 to 211.
Let's look at those markets. Equity futures up 46. We advanced 1.4%. You know what this is? This is Bloomberg surveillance.
Quote on VAR. VAR.
With the First Word News, I'm Rishka Gupta. President Trump is denouncing a blockbuster report on his taxes as fake news. According to the New York Times, the president paid just $750 in U.S. income taxes in both 2016 and 2017. The paper says he reported losing millions of dollars from his golf courses and has hundreds of millions in debt that's coming due. The Times analyzed at least 2 decades worth of the president's personal and business tax returns. Democrats are previewing the tactics they'll use to oppose the confirmation of Supreme Court nominee Amy Coney Barrett. They're zeroing in on the risk to Americans' healthcare coverage. The Supreme Court will hear a case in November that could lead to Obamacare being ended. Regardless, Barrett's confirmation seems assured because Republicans have a majority in the Senate. The Trump administration has suffered a setback in its showdown with TikTok. A federal judge has temporarily blocked President Trump's ban on new downloads of the video sharing network. TikTok was due to be removed from U.S. app stores by midnight. Meanwhile, the judge refused to halt the November deadline for the sale of TikTok's U.S. unit. The UK and the European Union are starting a crucial week of Brexit talks. EU officials are stiffening their demands over how any trade deal will be enforced. They've lost trust in British Prime Minister Boris Johnson because of his attempt to rewrite last year's exit agreement. Still, both sides are holding out hope that a deal can be reached. And a big victory for Uber in the UK. A London judge ruled that the ride-hailing service is, quote, fit and proper to operate in the city. Last year, regulators revoked Uber's license to operate in London over safety concerns, but the company's cars were allowed to continue to pick up riders during a court review. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think that we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Most people that I know would do everything they can to not pay additional taxes. So I think we can have a debate about our progressive tax system, whether there are loopholes that need to be closed, and we can and should have that debate. We have it all the time, but again, I don't call it immoral. I don't want to pay $1 extra in taxes that I don't have to either.
Michael Waltz there, the Republican from Florida's 6th District. More on those comments in just a moment. From New York and London this morning, good morning to you all. 1 hour and 12 minutes away from the opening bell, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. New York stateside, equity futures up and up nicely a bit beneath the S&P 500. Futures advancing around about 40-odd points all through the last few hours. Now session highs up 46 and advancing about 1.4%. Nice rally over in Europe as well. On the equity benchmark in Frankfurt, Germany, we bounced back there after an ugly week of losses on the DAX. The DAX up by about 3 percentage points now. You see that captured in foreign exchange, weaker dollar, stronger euro, dollar 116.70 odd. And in the bond market, yields doing a whole lot of nothing. Curve steeper, up about a basis point, 0.67% is your yield on a 10-year Treasury, Tom.
And John, the real persistency here to me is a story. It's been lifting up 20-some points earlier, and we've basically doubled that through the morning here. SPX 3333 on the Standard & Poor's 500, call it a 7% correction from the highs. From the 2nd District in Arkansas, this week of politics, we love speaking to the Vanderbilt economist, French Hill. He joins us, of course, from Arkansas, from a place that is very much pro this president. French Hill, I want to talk about the Delta Bank of Arkansas. You are a banker at heart. What do you do when somebody comes in with loan documents like what the New York Times is saying of the president? I mean, this is odd financial statements, to say the least. Forget about the morality that Congressman Waltz of Florida was talking about. Just on a sheer doing business, have you ever done a business with someone like the President of the United States?
Well, Tom, good morning. Thanks for having me. When you look at real estate investors, our tax code really encourages real estate investment and treats it quite favorably. And when you make real estate loans and review financial statements of somebody who's a real estate developer, then you're going to be looking at cash flow and how cash is being used, because there are very few reported profits in a lot of real estate companies, particularly that use partnership or do a lot of upfront costs and a lot of upfront development every year. It's that development trail that causes a lot of those tax offsets for the net profits.
Will you expect to see the Vice President, Mr. Biden, really be aggressive about this tomorrow night? Does he use this as a weapon, or does he move on to the topics that matter nationally into your 2nd Congressional District of Arkansas?
I think Vice President Biden will go on the attack and contrast strongly the things he disagrees with the Trump administration. I think he'll probably stick to policy, but since he opened up yesterday in Wilmington with the health care topic, I think that'll be a principal topic because of the Supreme Court nomination, because of the efforts to change Obamacare that we've made in the Congress over the last few years. But I don't put it past Joe Biden from talking taxes.
Congressman, while we wait for November 3rd to come around, there's a question about what will happen after that date. And Mitch McConnell, Senate leader, has come out and said that there will be an orderly and peaceful transition of power. What will you do if you agree with Mitch McConnell about that, if President Trump does not concede or is unwilling to go along with a peaceful transfer of power?
Well, you know, all of our elections are controlled by our states. I think Americans who were actively watching the presidential election watched that play out in 2000 with Gore v. Bush and the efforts in Florida to recount ballots. So this will play out state by state. I, too, expect that we'll have a peaceful transfer of power in the inauguration of Donald Trump on the 20th of January. But look, this is going to have some challenges potentially in the states, and we'll just have to wait and see how that goes. There are lawyers on both sides to make sure every American vote counts. I would just urge Americans to vote early and mail their ballot early so that there's no controversy that their vote will be counted if they're going to vote absentee.
Okay, but absent faith alone, faith in the peaceful transfer, are you making any preparations, or other lawmakers, Republicans in particular, making preparations in the case that there is not likely to be a peaceful transfer of power?
Not that I'm aware of, because I don't think anybody expects that to be the case. I think people expect the vote to come in and be counted, and that we'll have a new president in January.
French Hill, I want to talk to you about stimulus. There's a wide presumption there'll be stimulus after the first of the year. It's been, by all accounts, a disaster. Certainly Jerome Powell suggests it's a disaster that we haven't seen a stimulus. What kind of stimulus would be most efficacious for whomever wins the presidency? What's needed right now?
Yeah, well, when you see the functioning of the markets and the access to both large corporations and public finance entities to be able to attack funding in the markets, it's really small business that operates in the realm that's still struggling. Either it's a closed down economy by state decision, or they're in a market like restaurants or hospitality that are still struggling. So for me, the most important thing is to extend the Paycheck Protection Program. We have $138 billion not spent in that program already appropriated. That's been blocked by the negotiations between Speaker Pelosi and the Treasury Secretary. We have a discharge petition on the House floor this week to try to get that bill through the House and over to the Senate with 218 votes at least in the House. So I think small business is where I would focus that stimulus, Tom. And also families, we've only clawed back about 50% of the jobs back from the sharp decline in April. And therefore, we need to have a compromise on both the unemployment compensation issue and any other support for our families.
Congressman, lucky to have you on the show this morning. Looking forward to getting you back. Congressman French Hill there, joining us on the latest effort down in D.C. on the fiscal side, and on that report from the New York Times over the weekend into Monday morning. Yeah. Into Monday morning we go with equity futures up 48, Tom. S&P 500 futures up around about 1.4%. We just keep adding a little bit more weight to the S&P 500 as this session grows older. But I think you nailed it, Tom, on a fiscal debate. Still a huge gap between Republicans and Democrats down in Washington.
Did you notice the word he used there, John? It was compromise. I mean,
No, I thought you heard me say that you nailed it there, Tom. But sure, compromise. Where is the compromise in Washington?
It's just not there. There's just, it's childish. And I mean, Lisa and I see it where we are in New York. I mean, I would suggest there is a desperation out there, whatever the employment numbers are, John. I mean, it's really pretty grim.
Tom, let me be clear about it. Here in the United Kingdom, there is a huge worry about the job losses that will come about when that fiscal support evolves in the coming months here in the United Kingdom. Much more still to come on that from New York and London. Good morning to you all. This Monday morning, equity futures with a bid. The S&P 500 rallying by about 1.4%. This is Bloomberg Surveillance live on Bloomberg TV and radio.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Counting it down to the opening bell in New York City, with equity futures getting a nice little lift this morning, flying out of the gate in Europe, a rally over in Frankfurt, Germany, and a lift on the S&P 500. Here's the price action, up 48 on the S&P. We advanced 1.4%. In the FX market, euro dollar 116.70, firmer by a third of 1%. That's a weaker dollar. And let's just get to a charter cable, because pound sterling has been all over the place in the last week, trapped between seemingly Brexit roulette and the latest COVID restrictions. We've had a 129 handle last week, recaptured it briefly this morning. We've been as low as around about 126 last week as well. Tom, we've been all over the place off the back of COVID restrictions, not great for this economy. Then some happy talk going into Brexit negotiations later this week, and we get a nice bid beneath sterling. It's the outperformer in G10 through much of this morning.
It shows the confusion out there, and certainly the last month we saw it, and here into the end of the third quarter we see it more and more again. Economic data this week, of course, coming up on the unemployment rate. What John, Lisa, and I know is it's always a problem to deal with Dr. Coronado with macro policy perspectives. Julia Coronado writes research notes where you read them, yeah, but she has exquisite charts within her note. And Dr. Coronado, you have a chart jaw-dropping on the expansion of the Fed's balance sheet. Let me ask you the question I asked in 08, 12, 16, and now here in 2020. What is the process for the Federal Reserve System to bring their balance sheet into order, into line?
Well, Tom, first you'd have to define what that means. I think that the Fed's view of the balance sheet has changed relative to the years you cited. It now recognizes the balance sheet as one of its main tools of policy, not just something to use in case of emergency. So when you hear Jay Powell in front of Congress and he's asked about the future of the balance sheet, he says, we may not ever need to shrink it. We may need to just stop expanding at some point and let the economy grow into it. So I think that they're done with taper tantrums and, actually shrinking the balance sheet. I think when the economy is on a glide path and in a self-sustaining mode, they just sort of phase out of the purchases.
And Julia Coronado, folks, goes to the heart of the matter, which is the belief that we will grow our way out of this natural disaster. What's your timeline, Julia, to get back to normal?
I think the fiscal policy gyrations have probably delayed that. So I'm looking at 2022 before we're sort of back to where we were. I think we've got a difficult phase ahead of us, depending on how the election unfolds. I don't expect a fiscal package before. And as you were talking in the previous segment, we've got a wave of small businesses, restaurants, retail. We've got the airlines, a lot of businesses where the support is running out and the recovery is still stalled for them. And so we could see another wave of layoffs, or at a minimum, the end of the rehiring that we've enjoyed through the summer, and that could really slow progress down. So, the prospects for fiscal policy really depend on the outcome of the election, and that may be, contested or some time in coming. So it really is 2021 before we're looking at the possibility of meaningful fiscal support, I believe.
Julia, financial conditions can smell it. They got the sense of it in the last couple of weeks. We've tightened up a little bit. I just wonder from your perspective, the distinction between a Federal Reserve managing market functioning and massaging financial conditions. What does policy look like when they start to do the latter?
Yeah, that's a great question. They're not really sure exactly how they work. They know they work. They're very effective in supporting financial conditions. But how do you transition from that emergency setting into just kind of an ongoing support? I think for now, we're looking at them just holding the purchases at the current pace for a while. And again, we need clarity on the recovery and some sort of sense of a self-sustaining dynamic taking root before they even contemplate, or as Powell says, thinking about stepping away from the current pace of purchases. But they've communicated that very fuzzily because they all sort of see it differently. Some see it as signaling, some see it as portfolio balance channels. And I think for me, it's all of the above, and they're not willing to mess with success right now. So I don't think we're going to see them even, attempting to back away from where they are right now.
So we've got a good idea of what success looks like. Let's talk about what failure would start to look like. They've all got the same things on the dashboard, Julia, and I hate to ask the juvenile question, but from your perspective, as you look at markets right now, have you got levels in mind? If you start to widen out by 100 basis points, 150, is that enough to test this Fed's patience?
You're talking about credit spreads?
Yeah, high yield spreads at the moment. We had a 40 basis point move last week. It's not ginormous. I'm just trying to get my hands around where you think the Fed would start to worry a little bit, Julia.
Yeah, no, I think you're right. I mean, I think if we saw 150 basis point widening, and again, it's not just the level of the spread, but the pace at which it's widening and the conditions around which that's happening. But of course, Jonathan, we know that they've got that facility up and running. The corporate credit facility in both the primary and secondary market is ready to step in at any time. And that in and of itself keeps those spreads from widening tremendously. So they've actually put this automatic stabilizer in place in the corporate credit market. And, it serves as a sort of discipline or lack of discipline mechanism, depending on how you're looking at it. But it really has prevented that equity, nervousness and volatility from spreading directly into corporate credit. And, that facility is not going anywhere. So, again, if they need to step in, they can just amplify those purchases a bit more, both the ETFs and step up the primary purchases as well. So that's there as a tool ready to go if they need to.
Yeah, I got to say, don't mess with success. There is a question of whether success really is anesthetizing the credit function as signaling some sort of corporate distress. Julia, I'm looking right now at a Federal Reserve balance sheet, about $7.1 trillion. What's the ceiling for that in the near term?
The pace of that expansion has slowed down pretty dramatically because in fact, we've plateaued in the last couple of months because the emergency liquidity facilities, the dollar swap lines, the repo operations, the various liquidity facilities, they're all shrinking. They're actually, they've shrunk by several $100 billion. So that's offset the ongoing expansion. I think what we're going to settle into now is a sort of more gradual, steady pace of expansion. I don't think that there's a hard limit. And I think you use a good word, anesthetizing. That's kind of exactly what they're doing for now. We're still in this acute phase. They're not nearly as sanguine as market conditions would suggest investors are about the outlook. They're very worried about a second wave, turmoil around the election, another wave of layoffs. So again, until we get that, an accumulation of evidence that we're in a self-sustaining recovery, I think they keep that pedal not to the metal, but on, steady expansion.
And Julia, to that point, when you said the second round of layoffs, is anything the Fed is currently doing, is anything actually keeping jobs in the system or suppressing the jobless rate?
I think the most direct transmission we see from the Fed's policy to jobs is through the housing market. So we know that low rates are stimulating demand for housing. That's been incredibly robust. We've seen the construction sector rehiring, and certain segments of the economy, like the home improvement stores, are hiring, and they are doing well. So, you know, that's the direct transmission. And the Fed is the first to recognize the bluntness and the inefficacy of a lot of its tools in creating jobs, and has been effectively begging for fiscal policy. They're extremely worried that they will not be able to do their job, and are asking Congress to do theirs. And of course, they're not.
Julia, what's your working unemployment rate?
For Friday?
No, I don't mean for Friday. I mean all in. I mean, there's a huge mystery about claims of different programs, who's getting counted, et cetera. Are we really at 8.2, 8.3%?
No. I think the household survey is clearly the lower bound of where we are. I mean, one, we know there's some misclassification within that survey. You know, we also know there's double counting and fraudulent issues with claims. So I kind of, you know, squaring the circle, I come somewhere in between, which would put us around a, 12 to 15% unemployment rate. I think that's the reality on the ground. And I think, we really need to triangulate these numbers, and it's really hard right now, but I think, the official unemployment rate is the lower bound.
John, I'm sorry, but like every 42 minutes, we have to say what she just said. I mean, I don't think it's said enough.
You can say it. You can repeat it.
12 to 15%. Those are ginormous numbers.
They are ginormous.
Julia, great to catch up. Appreciate it. Julia Coronado there of Macro Policy Perspectives, the president and founder. Tom Keene, you mentioned the data later this week. Payrolls Friday just around the corner for the month of September. Here are the numbers so far. Moving target, of course, but our survey so far, the median estimate, 850K on a headline number. Unemployment, I think this is what you were getting to, Tom. 8.2% is the estimate at the moment. 8.4% is the previous read, but 8.2% is what many economists seem to think this will drop to this coming Friday, Tom.
I just think it's a fiction. I mean, we'll report it. It's good numbers, and BLS does as best as they can with it. But, I look, John, at the Economic Policy Institute, which is a labor and, has a Democrat Party feel to it. But Heidi Shearholz and her team have done a great job trying to juxtapose all these different government programs. You have Mark Zandi at 14%, Julia Coronado even worse.
You want to talk about a fiction? Unemployment in the UK at just north of 4%. Really? Does anyone think unemployment in the United Kingdom is just north of 4%? Wait until what it looks like when these fiscal provisions come back. Tom, it's going to be ugly.
I just want to... Can they unemploy the VAR operators? I think that would be, a good start. They could...
You haven't talked about it yet. Do you want to just let it out and explain to our listeners, the other 50% that hasn't got a clue what you're talking about?
There are stupid things in American sport. John, explain how they're ruining your game.
There is a video assistant referee in English football now who is making terrible, terrible decisions for Tom Keene's Tottenham Hotspurs.
Right for everybody else.
The game over the weekend awarded a penalty to Newcastle for a handball that Eric Dyer couldn't even see because he had his back turned to the ball. So Tom's unhappy this morning.
How did that happen?
Things happen. Look, Newcastle fans are happy. Markets go down, markets go up, Tom.
No,
markets go down, someone's unhappy, someone's happy. There's always someone on the other side of the trade. Remember that. Coming up next, Dr. Peter Hotez of Baylor College. Looking forward to that from New York and London.
Yes.
This is Bloomberg.
With the First Word News, I'm Rishka Gupta. A blockbuster new report says President Trump paid just $750 in U.S. income taxes in 2016 and 2017. According to the New York Times, the president reported losing millions of dollars on his golf courses. Plus, he reportedly has hundreds of millions in debt that will come due the next few years. The president called the report fake news. He told reporters he pays a lot but didn't offer any specifics. Senate Republicans have signaled there will be a quick confirmation process for Supreme Court nominee Amy Coney Barrett. Hearings would begin in about 2 weeks, and President Trump is optimistic that Barrett could be seated on the High Court before Election Day, November 3rd. Almost 200,000 people in Northern California had their power cut because of the threat of wildfires. PG&E is trying to keep its power lines from starting new blazes. The utility went bankrupt last year after its equipment ignited catastrophic fires. Wildfires in California have burned thousands of acres in the last month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So, to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Live coverage of the first presidential debate begins Tuesday night at 8:30 p.m. Eastern Time on Bloomberg Television and on Bloomberg Radio.
Are people afraid of calling you because their own credit ratings might go down if it's known that they have to borrow money from the IMF?
If you're a president of a country in trouble, you better call.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Signing today will guarantee restaurants operate, will not allow closures. They can operate at a minimum of 50% regardless of local rule. And then if a local restricts between 50 and 100, they've got to provide the justification and they've got to identify what the costs are involved with doing that are.
What is and what is not safe? The governor of Florida, Ron DeSantis, on a 50% capacity floor, and then you get to play with the other 50% at a local level. Tom Keene, it's been very confusing over the last week, particularly here in the UK. Not going for a capacity restriction, but going for a time restriction, 10 p.m. is the cutoff time. And I don't know if you saw the pictures across the United Kingdom of what happens in some of these cities after 10 p.m. now. Many people run to the local store and get some alcohol and carry on partying outside. There's clearly a problem. It's not gone away.
It is absolutely bizarre. It is. I'm really glad we ran that tape of the governor of Florida there. He was out at 100%, and they've backed it off to sort of a 50-50 agreement. Of course, this is a huge topic in New York. We welcome all of you. John, I know you've got Diana Omoa coming up. Why don't you tell us about that?
Looking forward to that. Big calls coming out of several banks on emerging markets, Tom. Some saying pull back, some saying get in. I can tell you Diana Omoa has a more constructive view on EM, and I'm looking forward to catching up with her a little bit later this morning.
That'll be important. She's always razor sharp smart, really, really quite good. Right now, we advance the dialogue on vaccines, on this terrible pandemic. He was with us early in February, way out front, of course, and no surprise, Peter Hotez of Baylor College and their National School of Tropical Medicine. Dean Hotez, thank you so much for joining us again. I want to go right into the nitty-gritty here of what you do, which is you get $1 million grant from the good people at Tito's Vodka, pull it together with a bunch of other donations, get a guy from India to come in as well, and you take baker's yeast, which is used in the hepatitis vaccine, to come up with traditional medicine vaccine. How is that process going of using truly traditional vaccine development to get a cure for this terrible pandemic?
Well, thanks for that question, Tom. There's a lot to unpack there. First of all, if you order a vodka drink, you definitely want to specify Tito's vodka. But beyond that, what we did was we signed a licensing agreement between Baylor College of Medicine and this amazing vaccine producer called Biological E. It's not a household term in the U.S. and Europe, at least yet, but they're one of the big producers, and they're working to scale up 1 billion doses of the vaccine that we developed early on at Texas Children's and Baylor College of Medicine. So that's really exciting for us. We've never made 1 billion of anything before, and it's not quite baker's yeast. It's you can use baker's yeast for some vaccines, but for this one, it's a different type of yeast called Pichia, and we're scaling up production. And the hope is that it could be just like the hepatitis B vaccine, which you can make for $1, $2 a dose, and you can make it all over the world. It's made in Brazil. The hepatitis B vaccine is made in Brazil and Cuba and India and Indonesia. So the hope is that this will become the first low-cost global health vaccine.
How do you respond to the different sciences here of modern vaccine virology? The ones that are complex, the ones that are new, the ones that are improving as you take a more traditional route?
Well, I kind of like the innovation, and I like the mixture of the innovation and the traditional, especially if you're trying to work quickly and trying to get a vaccine out as fast as you can by trying different technologies, because you don't know what's going to wind up working best in people in terms of inducing a protective immune response and protection and safety. So by trying the different technologies, you get multiple shots on goal and increases your likelihood of success. So it spans the gamut from really cutting edge, unproven technologies like the mRNA vaccine or the DNA vaccine approach or adenovirus to sort of old school stuff that we're doing, like a recombinant protein in yeast or inactivated virus vaccines. And the hope is that we'll get multiple vaccines that both work and are safe. And because if you want to vaccinate the world, we've got to move quickly.
Dr. Hotez, Tom Keene will ask you about yeast and creating the nitty-gritty of the vaccine, and I'll ask you, when can we get back to normal? And the way that I'm wondering is I'm looking at how China is giving an unproven vaccine to thousands of individuals in that country. What is the potential consequence of doing this, and should we do it if the consequences aren't that bad?
Well, the consequences of getting it wrong are substantial. I mean, if you wind up putting a vaccine out there that turns out not to be safe or doesn't work as well as you thought, that undermines vaccine confidence. And we've seen that happen before. We saw it happen last year in the Philippines, where there was loss of confidence because of a new vaccine that was introduced, and we and parents wound up stopped vaccinating their kids against measles, and they had a catastrophic measles epidemic that led to thousands of deaths of kids. And so, you know, vaccines are a special type of pharmaceutical in that the ecosystem is very fragile, and it doesn't take much to undermine confidence confidence, even if it's a good vaccine, it can still get voted off the island. I mean, we've seen that happen with the GSK Lyme disease vaccine. It was a good vaccine, but because of public perception, it tanked, and that was true of one of the rotavirus vaccines as well. So history is littered with good vaccines that are never used because of public perception. So that's really important.
And meanwhile, as we wait over the next 3 months, a lot of people are expecting a second and third wave of the virus. What's that going to look like?
Yeah, I'm very worried about this fall, Lisa. We're starting to see an uptick now in the northern part of the Midwest, in Wisconsin, in the Dakotas, and I'm wondering if this is the beginning of that big fall surge that everyone's predicting. And it has two consequences. One, especially in the northern states where people are indoors a lot, I'm worried, and that'll include coming back potentially to New York and Boston and of course the UK. But also now there's some new data that came out over the summer saying that for reasons that we don't entirely understand, the severity of the illness goes up in cold weather as well. So it's not just the numbers, it's the quality. Right. You remember back in New York in March and April how terrible it was. That may be more than just a learning curve in how to take care of patients. There might be something about the cold that's giving higher virus inoculum. Right. We don't really understand it, so that's something to look out for also.
Dr. Hotez, I want you to address now on radio and television people that question whether they should be giving flu shots or pneumonia shots, bacteria, virus, whatever, to their kids, to their loved ones as well. Address the efficacy and safety of these common shots.
Well, they're life-saving. Remember that measles epidemic that you had in New York last year in 2019. That landed 50 in the hospital, including 18 in the intensive care unit. I mean, we don't make vaccines for diseases lightly. We do it because they're serious pathogens and serious illnesses. Same with influenza, which, up until COVID-19 was typically one of the single largest killers of people around infectious diseases. So you want to take those illnesses off the table by getting them vaccinated. The problem is there's a very aggressive anti-vaccine movement out there that actually started in the UK, but it was amplified like only Americans can, and it was really revved up in the United States, and it's causing a lot of damage right now. Well, so it's hard to download anything but misinformation. So you have to be careful.
We've got to leave it there. Dr. Hotez, thank you so much. Peter Hotez, truly one of our leaders in this pandemic of Baylor College of Medicine. Lisa, future's up. If we keep going, Lisa, we'll get over 50. We're not there yet.
No, and it's unclear exactly how long-lasting this is going to be. Volatility still abounding.
We will see. Futures up 48, Dow futures up 382. With David Weston, the former governor of the Commonwealth of Massachusetts.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang